Hello everyone, this is Sebastian with Ritos Analytics, formerly known as Oracle Analytics. As you may have noticed, I've changed the name of the channel and will be going by Ritos Analytics from now on. Now, I know it's been several months since I've last updated, but with more free time on my hands, I should be able to update more. Without further ado, let's get started. Right now we're looking at the S&P 500 ETF, SPY, and let me just start off with taking a look at our major levels. As shown in the thumbnail of this video, we have major support characterized by this downward trend line right here, and two major resistances highlighted by this trend line and this trend line. We also have major support stretching back to the 2020 COVID high, shown here. Let me change the interval. Alright, so zooming out to the 1 week chart, we could see that we have a major level of support from the 2008 crash stretching to the 2020 COVID crash, and I've copy pasted this line to create a channel, bringing it to the 2020 COVID high. Now we could see that the current market is at this support level. Zooming back in, we see that today was a day of indecision. This could both be interpreted as a good or a bad sign. We can see here that we broke below a level of support, as highlighted by this blue horizontal line. This puts us in a channel characterized by these shoulders here, and we can anticipate a sideways movement in this channel until a breakout is confirmed either way. Unlike previous patterns, there is no divergence with the RSI as shown here, so it would be difficult to determine what exactly we do. However, we could see that we are currently sitting on significant support, and we have been making a series of higher lows. Zooming into the 1 hour chart, we could see that we have a series of higher lows here, here, and here. Do keep in mind that on a long-term outlook, we are still making a series of lower highs. So until we manage to break above this downward trend line right here, this resistance level, we should keep in mind that we are still in a technical bear market and react accordingly. Moving on to the QQQ, we can see that there is a similar setup. Much like the SPY, the QQQ has been in a long-term downtrend. A few days ago, we retested our resistance trend line, but did not manage to break above. We were rejected off this resistance trend line and have been sent down to this 280 region. This means we are currently at a make it or break it stage for QQQ, and by extension, the entire tech industry. Now, zooming into the 1 hour chart, we can see that we actually filled a gap here, which represents a significant level of support. I expect a retest of this support level, at which point we may bounce off and try to break out of this downtrend. However, should we manage to break down below this support level, I anticipate a quick drop to our next level of support, which puts us at about 269 on the QQQ. Now, should we manage to break below this, we will be brought down to this purple support trend line, which I see as a very strong support. There is a reasonable buy signal at this purple support trend line, with price targets at 270 and this upper purple resistance trend line at 280 or whatever price it'll be by that day. Moving on to the IWM, we could see that there are similar levels as shown by these blue resistance and support trend lines. Currently, we are sitting near the bottom of a major support channel as highlighted by this blue horizontal trend line here. Much like the case with SPY and the QQQ, we have seen a recent series of higher lows, which would indicate relative bullishness. On the short term, we may seem like we're recovering, but on the long term, we should keep in mind that we are still in a major downtrend, as evidenced by failure to break above these resistance trend lines and a long-term series of higher lows. Today's price action has brought us below this level of support here, marked by this low and the gap fill, which indicates to me that unless we manage to form a relative low here, we should be seeing a quick retest of our blue support channel trendline down here at 165. Should we manage to break below this 165 level of support, I anticipate a quick retest of our long-term support trendline, which would bring us to about 160. If we do manage to reach this area down here, I think there would be a reasonable buy signal for a potential bounce up to this region where the lines converge at 165 again. For a long-term bullish buy signal, we would need to see the IWM break above this resistance trend line shown in the middle here. Once we do that, we should bounce between these two lines until a decisive breakout. If we break above, then we should see a gap fill at 183 rapidly, followed by a retest of this 188 resistance level. However, such a scenario would be highly unlikely unless SPY breaks out of its own bearish downtrend. I hope my analysis in this video was informative. Thank you for watching, and I'll see you in the next video.